everyone, Business Guru here. So a couple of other topics. There's a few other topics I want to deal with before I start illuminating and fleshing out and start talking about the stages of entrepreneurship in more detail. So we've dealt with the year-end choice, which is one of the first decisions you're going to have to make when you're setting up your business and how you're going to set it up, whether you're going to do a sole proprietorship, partnership, or a corporation. Now, the other thing that you need to do is you're going to have to decide how to deal with GST, HST. So in Canada, the rule is that you must register and collect HST or GST as soon as your sales pass $30,000 a year for all of your associated companies. Now, in another video, I'll talk about association and relationship because that's an important concept. But for now, just assume that it's just your company or your sole proprietorship, as the case may be. Now, my recommendation to people is that you should register regardless as soon as you can. And if you can get them to backdate the registration to when your business began, if you're a little bit late out of the gate in getting it registered, my advice would be to do that sooner rather than later, so that you can start claiming HST on input tax credits on your expenses. The reason I suggest this is, yes, if you register, you do have to charge HST and you do have to collect it. So even if you're under $30,000, you will have to collect HST. But the thing is, if you register and you collect HST, you get to claim the HST back on your expenses. If you don't register, okay, and you aren't selling 30,000, all that happens is that the HST that you've paid on all your expenses is just gone. It's a nothing. Whereas by registering, you at least give yourself the opportunity to collect that money back. Now, it is going to be some paperwork. It's going to require you to, if you don't want to owe money, you are going to have to probably put aside the HST that you collect, or at least a reasonable estimate of it, but it will give you an opportunity to get back the money that you're spending on your expenses up front. Now, what you have to charge, of course, will depend on which provinces you're providing your goods and services to. We have what are called participating and non-participating provinces. And all that means is whether or not the province collects its own sales tax or whether it's participating in the harmonized sales tax regime. So, for example, New Brunswick and Nova Scotia are both participating provinces. They do not have their own separate provincial sales tax. And so the sales tax rates in both of those provinces is 15%. Ontario, for example, is also a participating province. Its rate, though, is only 13%. And it got rid of and harmonized its sales tax regime with the HST many years ago. But on the other hand, BC, Alberta, Saskatchewan, Manitoba are not participating provinces. They have their own provincial sales tax that they collect, and therefore, if you're providing services to or goods to a non-resident or a resident of those provinces from your province, you're charging only 5%, just the GST portion. So there's a little bit of work required to figure out where the supply takes place. So the place of supply rules, and that gets fairly complicated. But generally speaking, it's going to be wherever you're based. And what was I going to say here? Yeah, no, that's fine. So you're going to have to know the place of supply. You will have to choose a period that you're going to report on. So all people have to report HST at least once a year. But businesses have the option of filing monthly or quarterly if they wish. Now, my own opinion is that monthly is going to be a giant pain in the neck unless you keep your books meticulously up to date. And so what I recommend to people is to do it quarterly. And that's for a couple of reasons. One, because you want to claim, if you're starting up and you have less in HST collected than you are expending in your startup costs, you want to get that money back, and you want to get it back as soon as possible. If you do an annual filing period, you wait a year. If you owe money because you're billing and selling more than you're paying out, you want to be able to keep that liability manageable and not have it accumulate over an entire year to where you're having to put out $10,000 or $20,000 in HST payable. And so you can manage that by just doing it, making sure you file and getting it paid on a quarterly basis. At least that's what I do for my business. And it's helped immensely keep everything manageable. So that's it basically for HST. It's a fairly simple topic. I mean, I'll get into what some of the methods are of filing and what can be claimed and what can't. I mean, that's a bit more in depth. Okay, there's also something called a quick method of filing. That's another thing I'll get into in another video. But this was just a quick video to explain the different thresholds for registering, the different filing periods, and what you should opt for in terms of frequency of filing. The other thing is, you want to make sure that your reporting periods coincide with your year end. Okay, they will not automatically do that if you're registering in the middle of the year and you're not able to get it backdated all the way to the beginning. So it's quite possible that you can wind up with a year end for HST purposes that's different from your corporate year end or your proprietorship. You want to try to avoid that, just because you're going to wind, if you have two periods that are non-coterminous, you're going to have stub period issues that you have to deal with. And so what's often preferable here, if you register at an odd time, is to file a yearly return or a quarterly return in order to bring your filing periods up to where you want them to be. So for instance, let's just suppose you've got a year end of January 31 and you registered for HST in March and you weren't able to get it backdated to January. So what I would do in order to try and align my periods as much as possible is I would opt for a quarterly basis, and if I registered in March, I would file a March return, and I would have it be a short quarter on not March. I would, if I had a January year end, I'd want the period to end in April, so that my final period will end in January. And so I would wait until the end of April and I would file a quarter, and that way I could do May, June, July as another quarter, August, September, October is another quarter. November, December, January is the final quarter. And that would bring all of my periods into line so that a CRA would know that my year end is January 31st. Whereas if I had waited or done it on a yearly basis, I would be in a position where my periods would be out of sync. So that's one way to fix it. And, CRA won't have any issues with that whatsoever. So anyhow, that's it for this topic. Thanks for watching, and hang in there.